All right, ladies and gentlemen, it is February 1st, 2025, and I am the real estate vet guy. And I made this presentation to share my predictions on 2025 asset classes. So hopefully, you guys find this information valuable. It took a little bit of effort to compile all this data and make this informative and digestible for my audience. So without further ado, let's dive into it. Okay, so starting off, 2025 is the year of Donald Trump and Elon Musk. U.S. presidential election winner 2024, and he brought on Musk for the Department of Government Efficiency. And I think it's pretty fitting seeing what Elon Musk did with Twitter last year. And I think it's going to look similar, as you'll see. Um, So, Department of Government Efficiency, a lot of it is going to be cutting unnecessary government expenses, which I think overall will be bullish for the economy. This is a pretty hilarious thing that he did um, to basically cut government spending. He introduced the four pillars: work culture, performance, all that. And basically, any expendable position in the government, he sent this fork in the road email to, which you can read. This is the part that's pretty funny, where just if you want to quit, you can get a 8-month severance package. Send an email to this email. Only emails from your .gov or .mil account will be accepted. Type the word resign and just send. No explanation at all. Just type the word resign in the subject and send. And you'll get your 8-month severance package, and you're fired. Um, so we probably won't feel the effects of this immediately in 2025. Probably once those severance packages stop paying out, you'll you'll see um, you'll see some positive growth within the U.S. I believe. So I'm pretty bullish on the U.S. in general in 2025 and beyond, as long as Trump's in office. Just a snapshot of the U.S. debt clock. Here you can see Doge has actually saved us already $45 million up until this point. But the U.S. dollar, as we know, will always be inflationary, and I think the U.S. debt, you can just forget about where it's at, because we're probably not making a dent on it. So this is, I just kind of wanted to choose a graph for basically the consumer index. Maybe not the best graph, but here you can see that Americans still are continuing to accumulate debt, but their debt to income ratio is actually decreasing, which is a good thing. Um, so I think overall, Americans are still spending money, still willing to spend money, as their debt to income ratio is getting better, or at least not getting worse. Here you can see the small business index. It's a little bit down from quarter 3 of 2024, but it's still positive. And our GDP down from 2023, but I think that's going to increase a little bit more under the Trump administration with what he's doing with Musk. So overall, I think the U.S. economy is going to see steady growth, especially U.S. businesses that incorporate AI. Um, Here's what the AI market cap is, or market currently, and what it's projected to be. So any business that is leveraging AI, I think, is going to see exponential growth, and businesses in categories that are likely to be taken over by AI, like these here, um, if they don't adopt AI, I think they're going to suffer. So um, it's a good time to invest in AI. Good time to incorporate AI, and businesses that are not really affected by AI, I think, are going to still be steady. This isn't really about asset classes, but I wanted to throw this in here. Um, Trump noted that one of the first priorities in his presidency is controlling the border, and our border situation has basically changed overnight, where illegal immigrant encounters are down 76% across the board. So Trump takes office, borders are fixed, done. So that's noteworthy. I wanted to put that in here. Something to keep an eye on is what happens with the tariff situation. Trump wants to be pretty aggressive with imposing tariffs on foreign goods, which I think would hurt overall cost of goods in the U.S. I think it's going to promote U.S. based products and services. It's going to hurt ecom if they rely if if your ecom relies heavily on foreign importation. Um, but I think it overall be good because if we increase our um, if we increase our income from tariffs, Trump does want to decrease or has said that he wants to increase or decrease. Sorry, Trump has said he wants to decrease our federal taxes. That's the whole point of the tariffs. So we'll see if that actually happens. He's vowed to basically eliminate our federal income tax. I think that's mathematically impossible, but with what he said, I think it's likely that it will be it will be reduced somehow. So something to keep an eye on. If our federal tax rate goes down, I think that's going to further capitulate business growth as consumers are more willing to spend. So overall, I am fairly bullish on the U.S. economy, U.S. based businesses. Crypto. So Trump has announced that he is pro crypto officially. He wasn't as pro crypto in his last term. Um, BTC has been ripping. This is a chart and kind of how it incorporates with recent events. So I think BTC will still be a solid investment, but I think it does have to cool off eventually. So here, Donald Trump already signed an executive order to promote advancement of cryptos in the US. So now banks will be able to buy crypto, um, mutual funds, you'll have a lot more institutional adoption. And even the government can now stockpile crypto if they're seized from illegal activity. So very pro crypto news from the president. And I think it will stay pro crypto. I think we'll see some developments there. Crypto adoption. I think Trump does want the U.S. to be one of the first countries and to adopt crypto and one of the more aggressive ones in the next few years. We're second, really, only behind a few countries: India, Southeast Asia. So, if you ever feel like you're too late getting into crypto or buying crypto, if you haven't bought any yet, U.S. is one of the biggest adopters in the world. So, considering that there's 7 billion people in the world, actually, I think more than that. There's still a lot of growth left with where crypto can go. Um, the sentiment towards crypto has overall been more bullish recently, when in fact, actually, crypto ownership is has been on the decline slightly. So, not a bad time to get in. Um, BlackRock has been stockpiling crypto, one of the bigger or biggest investment hedge funds that exist in the U.S. Not a bad idea to follow in their footsteps. Market cap continues to increase. Crypto greed and fear indicator. We're not too overheated. The crypto market only 54 greed. That's not a bad time to invest. Anytime I've invested in fear, when the crypto greed index is in fear, it's virtually always worked out for me. So again, I think this supports a good time to invest in crypto, either BTC, or one of the top, I would say, one of the more safer altcoins. I have a few altcoins myself. Layer ones have been doing very well, and I think we might see an altcoin season here pretty soon with how well Bitcoin has been doing. Um, just a reminder, crypto usually runs in cycles, so don't get caught holding the bag. Be a little cautious when investing in crypto, but I believe we're somewhere between optimism and belief. Bitcoin has gone up quite a bit. ETH is touched its all-time high, hasn't surpassed it. Solana, um, trying to think of what other layer ones. BNB have all done very well. Have at least touched their all-time highs. XRP's surpassed its all-time high, and I think it'll, once it starts trickling down into the smaller cap coins, the small altcoins, we'll start to get into the thrill and euphoria stage of the cycle, and at that point be ready to sell. But crypto, I predict will be pretty bullish in 2025. 2026 we'll see, but I think 2025 there's a chance we reach the sell zone here. Can't talk about housing, or can't not talk about housing, being the real estate vet guy. So here's two charts that I think are important from the Federal Reserve. Average sales price has gone down slightly, while housing supply has really gone up since 2020, which I think is bad for real estate overall. Mortgage rates, I think, we're going to be mostly going sideways in 2025. I don't think it's going to spur any real action in the market. I think it's going to end somewhere starting with the six, probably 6.5. So I don't think we're going to get any action there. A lot of sellers are sitting on their bags with the lock-in effect. About half of U.S. homes are sitting at a 4% interest rate or lower. So a lot of sellers are hesitant to enter this market with the interest rates they have. If a large chunk of these homeowners were to sell, I think that'd be bad. As supply rises, I think home prices will fall. Home sales are way down since 20. I mean, everything's down from 2020, understandably. But home sales are really the lowest they've been in the 20th century. With the colors here aren't labeled, but I can tell you that the green is like the Sun Belt area, the South, that's Florida, Texas, like Georgia, those kinds of states. So I think there's some decent sales activity in the Sun Belt of the U.S., but otherwise down. So um, pretty pretty bearish for real estate overall in 2025, despite being a big advocate for real estate. I think 2025 is still not going to be the year for real estate. Housing affordability is terrible. We probably all know that by now. I'm sure everyone and their brother talks about how expensive houses are nowadays. So this is something that is a little bit scary, where with houses being so unaffordable, if buyers decide not to buy these expensive homes, I think we're just going to have to we're going to see home prices decline. I think something's got to give eventually, until interest rates come back down again, and the the golden handcuff homeowners just decide to start liquidating and get to more of a healthy real estate market. Um, Still, big discrepancy between U.S. home prices and rents. Um, so this is also kind of the scary thing about real estate. I think this number is gonna tighten up. So Not a good time to be flipping homes or trading real estate. But I would say not a bad time to get into affordable housing, where you buy below the average home price in more affordable markets. Like I think uh, I think affordable markets in the South are going to do overall pretty well. And other affordable markets like Indiana and Buffalo are going to do well. Also, never really a bad time to buy a primary home, just because of the tax benefits of when you eventually get to sell it. You basically pay no capital gains tax. Um, so this is I include this just because it's kind of sad that the average age of the first time home buyer is now 38. It was 35, which I thought was sad last year. Now it's even more sad. You gotta you gotta be more serious about buying a home. And if you've bought a home before the age of 38, congratulations, you're better than the average American. And if you bought your second home before the age of 61, then yeah, you should feel pretty proud about yourself. I think it's real estate's one of the best wealth creators in the history of mankind, and I think we could do a lot better than this. But a lot of buyers are sitting on the sideline, a lot of sellers are sitting on the sideline. Um, um, we'll see what happens. We'll see what happens. I'm a little nervous that we're gonna have a crash, but we will see. Um, Otherwise, we just keep going sideways until interest rates go down, maybe next year. But I am a little pessimistic about real estate this year. This is growth by state. So notable things: New York, California, still everyone's leaving, having a lot of outbound migration. I think most notable here in 2024 is states that were very hot the past 3 years have now kind of more neutral, like Texas and Florida. I can tell you, buying and selling in Florida, Florida is definitely have been cooling off, especially with the somewhat of assurance and crisis going on with the hurricanes we've had. Um, Nevada, Arizona have cooled off, and we're seeing still some resurgence in the Sun Belt with Tennessee, North Carolina, Arkansas, Kentucky. And this is the only slide I have on stocks. Overall, I'm probably the most bearish on, just because they've been so hot recently. That's that's got to come down to the mean. Stocks versus money supply. Stocks are way up right now. So I think stocks are inflated by 401ks, and they're inflated by foreign investors. So once those things start to once people prefer to have more cash on hand, which I think is a good strategy right now in the uncertain real estate market, the stocks are going to come back down. So if you've made some money on stocks, I would advise you start taking profits. So that's all I have for you. Like and subscribe. Thank you if you've made it all the way to the end of the video, and I'll catch you in the next one.